Good afternoon and welcome to Let's Get Digital, the future of Bitcoin and digital assets. Today we'll gain a greater understanding of the current state of digital assets, enabling you to better evaluate the opportunities and challenges for your organization. We'll also weigh the pros and cons of potential strategies. So thanks for joining us today. I'm Emily McCormick, the Vice President of Research at Bank Director, where I coordinate and execute our research projects, including our annual surveys and ranking banking study. I also write for Bank Director Magazine and bankdirector.com. Today's webinar is brought to you by both Bank Director and RSM US LLP, an information resource to the financial community since 1991. Bank Director focuses on the strategic issues most fundamental to a bank's CEO, senior leadership team, chairman, and directors. RSM offers world-class audit, tax, and consulting services to middle market businesses. RSM US LLP is the U.S. arm of RSM International, a global network of 48,000 professionals across 120 countries. We are offering continuing professional education credits for this webinar. To qualify for credits, you must be in attendance for the full and complete webinar, and you must participate in all 3 polls. If you want to receive CPE credit for this webinar, just email Shelby Lee at slee@bankdirector.com. We'll send out certificates 2 to 3 weeks after the webinar. Now, before we get started, I have just a few more housekeeping items to check off. First off, we can't hear you because you've joined this webinar in listen-only mode. We do recommend that you click on the slide bar at the bottom of the screen to put the presentation into full screen mode. If you have any questions for our speakers, just note those by clicking the Q&A button found on the right side of your screen. You can do this at any time during the presentation, and we definitely encourage you to ask as many questions as you like. Once our presenters have finished with their talking points, we'll have some time for Q&A, and we'll address as many of those questions as we can during that time. There's no need to take detailed notes. The presentation will be shared with all attendees within 24 hours via email. You'll also be able to find it on both bankdirector.com and rsmus.com. If you have any technical issues, you can note those using the moderator chat feature on the right-hand side of your screen. Regarding our polls, those will also appear in the sidebar near the Q&A button. When you've selected your answer, just hit the vote button to submit your response. And finally, the opinions expressed in this webinar are those of the individual speakers only, and they do not necessarily reflect the opinions of the other speakers or of the entities with which the speakers are associated. So with all that out of the way, let me share a little bit about our speakers. Jay Schulman is the national leader for blockchain and digital assets at RSM, spearheading the firm's capability in addressing enterprise blockchain technology and the adoption of digital assets. Jameson Seitz is a senior analyst at RSM US LLP. He focuses on understanding, forecasting, and communicating economic, business, and technology trends, including blockchain. So, guys, I will pass it over to you.
Why, thank you, Emily. I appreciate it. And no better place to start than our agenda for today. So let me get that up and let me get my video turned on here so you can see me. And so today we're going to talk about a couple different things. First, fueling the convergence between digital assets and banks. I don't want to keep slides up the entire time, so we're going to drop the slide deck for a few minutes and have a fireside chat between Jameson and I about some of the issues that we have. Bring it back up for a visual of how a bank would transact using digital assets. I think that's a favorite picture. As I've done these things in the past, I think it kind of brings everything together. And then we'll wrap it up, as Emily said, with some Q&A. So please, as we go through this, definitely be, definitely be doing the Q&A. Sorry, just problem there with the slide deck. So let's start off with a polling question so you can get your CPE credit. And so where are you in your digital asset journey? A, this is the first I'm thinking about it. B, we've discussed the idea, but no decisions have been made. C, it's a when, not an if. Or D, we are well on our way. We have implemented or we are in the process of implementing something. So if you want to go put in your polling answers here. And And Jameson, thoughts on where everybody is in their journey? Do you think what are we going to see here as the results are coming in?
I think we're going to see more, at least thinking about it, right? I mean, Jay, you and I have been doing these presentations for 4 or 5 years now, and I think when we started, it was what's a digital asset, and I think we've safely moved off that base. So I love comparing these from year over year in terms of where we stand.
And it is interesting. Your prediction's probably going to be accurate. Just 5 more seconds left before we turn this down. And for those last minute, okay, that's the end of our polling here. 40% of you said we have discussed the idea, but no decisions have been made. I will say 8% are or have implemented a product. So that's usually a question as we go do these. Well, is anybody actually doing anything in this space? And 8% of the people on today's webinar are already there or well on their way to being there.
And Jay, the 40% lines up with our staff that holds crypto assets.
Yeah, we one of the interesting things is that we'll talk about is kind of the changing nature of how people and their relationship with money. And this is the slide on the screen is a great way to talk about that. And I'll pull from some of our statistics that Jameson mentioned. I think we all kind of jump to the fintech, the red here, and go fintechs are what's disrupting banks. And I disagree. I think that it's actually the payments piece that is really disrupting banks. And we can see a whole lot of payment providers that we're all familiar with: PayPal, Stripe, Square. I'll skip Robinhood for a second. Venmo is a really interesting one. So we surveyed our new hires, college hires, sorry, employees that have come out of college in the last 5 years. And we asked them, which of the following apps do you have installed on your phone? And Venmo is up there at 90 some odd percent of our employees have Venmo installed, and a majority of them would prefer to use Venmo to make peer-to-peer type of payments. BitPay is a really interesting one in here because that is in the digital asset space. They're a payment provider that is a gateway between crypto and the classic banking world. And so when we talk about the impact of digital assets, I want to get out of the mindset of investments. We'll have a polling question that'll kind of talk about that and really get into the mindset of payments, because I think that's where a lot of the disruption is going to be. Again, kind of getting back to this mindset of who's doing this stuff. This is a 2020 slide from a research group called The Block. Keep in mind this is 2020. I could probably put something up for 2021 that has just as much stuff in there, and it's only, I was gonna say April, it's already May, only May. We have Visa, US Bank, which announced something a couple weeks ago, PayPal, MasterCard, Venmo, which we talked about, JP Morgan Chase, which announced some things. A lot of big banks, a lot of big institutions are looking to get into the space and are opening up in every different way. And so as we talk through today, I wouldn't focus on chasing anybody that's on the screen. I would really be thinking about what is your business as a bank, who are the customers and the people that you service, and how can you service them using digital assets? Because I think what we will see is not every bank does the cookie cutter thing, but we will see a whole lot of different ways that we can address the market. And hopefully we'll talk a little bit today about some of those different ways that we can do it. So what is accelerating this? If I roll back to May of 2020 and I think about where we were versus where we are today, Jameson will go through kind of what's driving it on the regulatory side. I want to talk about what's driving it on the cultural side. And it really is all digital. And the comment that I've been using for the better part of a year is that there are a lot of people that really didn't want to do online check deposits and all the online stuff. They loved walking into a branch and talking to a teller and writing checks and doing all of those physical things. And what's interesting about the pandemic, and this is probably not news to anybody, is that it really pushed people, it forced people who otherwise didn't want to do a lot of things this way to go more digital. And you can see a lot of examples here from M&T and FNB and State, South State and Citizens, all seeing that drive towards digital. And once you start to drive to digital, the leap to digital assets becomes a lot smaller. When you're already doing a lot of this work on your phone, it just becomes easier. And so that's kind of the phenomena that we're seeing. And we believe that that's why banks are taking a good look at this from the culture side of it. Now, if we jump to the regulatory side, there's a whole nother set of changes that have occurred over the past year. And Jameson, why don't you turn on your video so we can see you and talk a little bit about what's been going on the regulatory side that's really opened it up for banks to be playing in the space.
Yeah, Amir, I do have the video on, so let me know if that's not pulling through. Tying back
to my screen.
So tying back to the your prior one, saying like why is it that COVID-19 is accelerating this? It's hard to say. It could be the remote, could be the desire from the consumer to do touchless. I put out a chart on our RSM Buzz, showing the data to back up this in stable coins. And I thought this was really interesting because you look at March to April 2020, and there's just a clear inflection point in the growth. It just hits that hockey stick and goes up. And that's just a stable coin, right? That's just the desire for the technology and the use. And it's not related to price speculation directly in terms of, it's not investments into Bitcoin. This is number of stable coins outstanding. Jay queued this up in terms of what is really driving this and who are the big actors. I think the OCC here was the catalyst. A little bit of history is, if you look back about a little over a year ago, Brian Brooks left his job as the chief legal officer of Coinbase, right? Coinbase just had their big IPO, and came over as, I believe, a chief strategy officer at the OCC under Otting. Otting then stepped down, so that was just kind of a cue to get Brian into being the acting controller. And I think he was that catalyst. He came from Fannie and Freddie. He has that banking background. He knew it. And his approach here was, look, let's establish some guardrails here and allow institutions to move forward with digital assets. And this isn't exactly anything new, right? I mean, he proposed the payments charter, which was really just another flavor of the fintech charter, which was started under the Obama administration even. So this is a slow move, and that's why I say catalyst, that Brooks really drove the agenda here, got them hyper-focused. Jay and I worked with some top-level people at the OCC for, I guess, past 18 months now, and it's just been it's really interesting the energy that they had under Brooks driving towards the digital asset agenda. Re-looking at their interpretive guidance and saying, well, how can we view this? And I think the philosophy that it came down to was payments. As Jay said, this is a payments adoption. And if you take the view that a digital asset transfer of value, a Bitcoin, if you will, or even just stable coins, which is what the OCC guidance was really driving at, it's just a modern form of check writing. You've distributed the back end processing and verification on the check side. But if you view it as that, it's kind of the pieces fall into place where the natural place for this action and the natural regulator for it in the banking regulator's point of view was the banking regulator. So maybe a little bit self-serving. I think a lot of people always say the SEC always sees securities, the CFTC always sees commodities, and the bank regulators sell banking activity. They put out several interpretive letters. There were several left on the desk that didn't make it out, that would have kind of finished up a lot of the guidance. I think some of that final guidance that didn't quite make it out actually did make it out in some of the language to the PCA preliminary conditional approvals that were granted to Anchorage. We saw that granted to Paxos, Protego, and BitPay is still pending. But January 4th, right, they came out and probably maybe one of the more, the most advanced guidance they issued on this in terms of, allowing banks to really run nodes in blockchains, saying, look, you can participate in the settlement layer of this new digital economy. I like to footnote that one with a footnote that RSM was cited to in that guidance for one of our explanations of what is blockchain. It's the Island of Yap series. It really shows that, as Jay said, this is blockchain and distributed. The distributed nature of it is nothing new. It's just the digitization of it and the adoption in the culmination of the Bitcoin blockchain that we think of. But the fundamentals of the distributed ledger date back to the Island of Yap and the transfer of stones and large record keeping. So I encourage people to go and check out that video by one of our associates, Sam Mock. We can move on to the next slide, Jay. So that's kind of what the OCC did, but the OCC didn't operate in a vacuum here. As I said, they were really the catalyst. This is another infographic from the Block Research. Great technical research on these items. I encourage people to check them out. One thing not on here is in 2019, the SEC issued some guidance regarding what custody could mean. And the footnote to it said, well, who would be a qualified custodian for SEC purposes? A bank would be perfect. Well, at the time, banks couldn't custody digital assets. That didn't happen until Brian Brooks came in as acting controller and put those rules in and kind of gave those permissions on that payments architecture. But again, he wasn't working in a vacuum here. We got a lot more, a lot of statements out of the SEC. Hester Pierce kind of made her claim to fame, very, a proponent of safe regulation in this space. And I think that's where we will get to, is safe regulation. What are the rules of the road that make sense? A lot of people hear regulation and think that this whole industry is going to get shut down. I don't think that's likely. I think there's too much invested in it. There's too much innovation. There's too much opportunity for the United States to be a leader in this, like we were with Silicon Valley in encouraging the development of the internet, that we should foster this, but of course in a safe way, right? The internet is the transmission of information and blockchain is the transmission of value. Now you have more consumer protections at play and not necessarily the same First Amendment freedom of speech. But again, we saw this from the SEC. The SEC has been a little back and forth, but Chairman Clayton, before he departed, actually issued a joint guidance with the OCC, which kind of gave the gist that, look, anything that the OCC is going to regulate, the SEC is okay standing down on. So really, stable coins, it was kind of, he passed the buck. While he was there, he also kind of passed Bitcoin and Ethereum onto the CFTC. So we're starting to see some clarity and guidance. We started seeing action from FinCEN providing KYC rules. There's an international group called the FATF, which provided some travel rule. Like a big issue in the tax space, especially one of an area I've practiced in for a long time is how are we going to tell people what their tax consequences are? A big problem in the digital asset space is there were no rules like there are when you transfer IBM stock from one institution to another, that the transfer is the basis and the information, the holding period. All of that's blank in the digital asset world. So we're starting to get some rules and some frameworks about how that information can be shared, how it should be shared. It's not just US centric. We're seeing India coming in with some rulings. We're seeing a lot out of Asia, a lot out of the Scandinavian countries and Europe. The OECD is working on developing frameworks and rules for what the reporting obligations look like. And all of this kind of culminates in a little bit more, it gives you better regulatory footing as you move forward. Without these rules and procedures and policies and statements, official record, it was hard for larger institutions to act in this space. Their auditors may be saying, hey, I got nothing to hang my hat on in terms of guidance. Well, that has slowly changed. And again, I think the OCC really drove in this regard, with authoritative guidance, very clear, saying this is the way we see forward, and then acting on that. We saw them take in 4 charters in late December or early December and really rush those through, there was a lot of industry kind of feedback saying, "Hey, what are you guys doing here?" And however you feel on that, they push those through in the trust charter context. They've gotten them, to preliminary conditional approval. We'll see how those take off. We'll see how, Michael has just came in, how he'll respond to that. I'll address a few points on that in a little bit with regards to how the OCC is going to move forward in this space. But, the big news right now is Gary Gensler is coming into the SEC. Gary Gensler taught the class at MIT on blockchain. So he knows it, he gets it, he knows how to regulate it. And the expectation is we're probably going to see the approval of a Bitcoin or Ethereum ETF this year. It's not purely US thing. It's not just because of Gary Gensler going in, because we also saw the approval of a Bitcoin ETF in Canada. So it's this global push. We've had this catalyst, and it's hard to put the cap back on the genie bottle. I think, Jay, we'll go to the next slide where we got a polling question, I believe. So we'll see, where do digital assets fit within the classic financial services ecosystem? Say A, chartered bank, B, broker-dealer, C, fintech, D, something new and different. And I suppose in that D, I would throw in the payments and fintech charter specifically, not necessarily the trust bank applications that we've seen.
I'll tell you, the early vote here is really interesting, where something different is winning out the race. My hunch is that we would see a pretty big pickup in broker-dealer. I mean, Jameson, you said SEC a ton during your last slide, and ETFs and things like that, which is certainly the broker-dealer world. But we're starting to even out now. Any surprises here for you?
No, and I think it's how the assets split, right? We have these clear payment assets, and then there's also these assets that look a whole lot like securities. The ICOs of 2017, where they were really used to fund operations. And I think it's smart to bifurcate those. Let's talk about the payments ones. Let's talk about the technology, and because I think that's the driving force in the banking world.
Well, let's wrap up the poll. Something new and different coming out on top. Fintech at number 2. I mean, these are all really bunched together: fintech, a chartered bank, and broker dealers. So really interesting response to this survey question. I think we're both going to talk about this one. I really, if there's one kind of cultural phenomena of all the things we're going to talk about today, it's the headline here in blue: banking is no longer somewhere you go, it's something that you do. And I'm not suggesting that we're not going to have tellers and do in-person banking or things like that, but it is this phenomena that it's something that you do. And when you accept that, when you think about the strategy of the bank, when it's something you do, you start to look at the core banking platform and what features and functions that gives you and whether that's going to work for the future. And then you start to look at some of the other types of services that you're going to offer. And certainly what Jameson and I are going to talk about is one of those services in particular is what can the bank offer around digital assets?
Yeah, I mean, it's no longer somewhere you go. And I think that started with mobile check deposit. It took a long time to get that up and running. We've seen growth of PayPal and Venmo, and it's really interesting to look at the statistics that PayPal put out. When PayPal launched digital assets on their platform, they let you go buy Bitcoin and Ethereum. The engagement they saw with their application and the number of times the users checked their app was through the roof. And of course, they're going in and looking at the movement of Bitcoin price. But anything to get your customers on your platform and see the other services you offer is, it's a great tool to drive to other lines of business, other services you provide. And then again, it's something you do. in this digital world, the expectation is that the technology brings those services to the consumer on Easter Sunday when they want to make an impulse buy. And, this is what digital assets, enable. They enable the, putting a disposable asset in the hand of the consumer on off banking hours. I think we'll probably see, looking forward, that we probably see eventually the death of the banking hour in terms of core banking services and how that's offered to people. We've seen that with, Venmo and PayPal executing transactions. That's kind of a layer 2 technology. I think the digital assets that we're talking about that run on a blockchain enable that 24-hour service, but settlement happens at the time of that transaction. It's a little bit different than the back end of how Venmo and PayPal work.
Well, and Jamison, between you and I, we've talked about Coinbase, certainly a big player in the space. We've talked about PayPal and Venmo and a whole bunch of other tech platforms. And certainly there's some of you listening who are going, well, how can I compete with those guys? And I want to make a really important point here is that you're competing on a different level. And so if you guys have never bought Bitcoin, for example, on Coinbase, you create an account, you do all the things you usually do, but then you have to link your bank account. And because once you have Bitcoin, it is, my old joke is, the old expression that possession is 9 tenths of the law, and cryptocurrency possession is 10 tenths of the law. And so Coinbase you'll go wire the money, you'll go wire $100 onto the Coinbase platform, and you'll buy Bitcoin, and then they're going to lock it up there for a couple days to make sure that $100 doesn't get pulled back by your bank. And so it's a high friction process. There's not a lot of impulse capabilities here because they are so worried about that gateway between the banking world and the crypto world. So when a bank takes on the same type of activity natively, and again, we'll talk about how you do that, the pretty picture at the end, take it natively, you've reduced so much friction because you're not relying upon that classic ACH, wire, SWIFT, wire transfer system to make these work. And so I wouldn't think about it in terms of price or fees or anything like that. You're really offering up you're offering up a frictionless experience compared to what all of the other providers are doing in this space. And I think that that's really what's interesting here. I have to say here and try to be, transparent and honest that there's probably, if we had a polling question that was, do you believe in this stuff, yes or no, you'd have 50% with yes and 50% no. It's one of those things that we certainly have clients at RSM that are creating products and building things into their bank around this space, and we have clients that say, you know what, this is just not for us. What we want to focus on now, when I turn the screen off here, is kind of how this would work. Have a little conversation of what the future looks like. And Jamison, if I could call you the OCC whisperer here for a second. You talked about Brian Brooks a lot, and certainly Brian's gone. That administration is out. We have a brand new administration as of yesterday. We have a new comptroller. Talk to me about where you think this is all going in the next 4 years.
Yeah, I think it's interesting. A lot of turnover. So after Brian left, we had Paulson step in as an acting controller. He was the chief operating officer. And the take I had on his tenure was really just to steady the ship. Keep it moving forward. Ordinary course, not really take on any new, endeavors. And now we have Michael appointed as, and as an acting capacity. I reached out to some of my contacts there and I said, well, what's your take on this? And the consensus view was this is an audition period for him. This is a politically driven appointment where, for the next 6 to 12 months, he can really test the waters and see if he can earn, at least the acquiescence from Senators Warren and Brown. They're driving a lot of power here. Senate Banking, and without their blessing, no one's going to come in as a full-time, comptroller. And what's his agenda? I think it was identified as we're going to work on climate issues, we're going to work on racial equality, and we're going to work on reversing Trump-era policies. So a lot of people say, well, what's that mean with regard to digital asset banking, the letters that were issued? And it does mean a look into those. But the statement was, look, Michael supports crypto as a payment. So I think as a payment mechanism, we're going to see this continue to move forward. There's a lot of interaction in the banking world between the OCC, the Fed, and FDIC, or three federal regulators here. So Michael comes over from the Fed. We have Jay Powell coming out and saying, look, FedCoin is happening. We're working on it. He does say it's years, not months away. So we'll see how we come out in terms of the global competition, because China has a digital currency, and by the end of this year, it will be rolled out, across their whole economy, and we'll see what that impact is. We do have digital dollars in the U.S. They're private digital dollars, so maybe the path forward is to regulate and bring those digital dollars, those digital stable coins that are pegged to the dollar, bring those into U.S. regulation, put those deposits in FDIC insured banks. Let that, we could bridge that gap that way and catch up, perhaps. It'll be interesting to see how it plays out. Again, we see Yellen talking a lot on regulation. I think that's what that means in terms of regulation. It means, what are the rules? What are the limitations that we want to impose in this space, as opposed to let's shut this down.
That's great, and I kind of want to talk a little bit about we spent a lot of time talking about getting to a charter or getting in this space, but there's also a lot about, once you're in this space, what the key considerations are. The two, and you talked about it a little bit, maybe on the FATF side, and some of the other things you were talking about, but the two things that come to mind certainly are know your customer, and I think what's interesting in here, we'll talk a little bit about this, I keep referring to my pretty picture, it better hold up, is the know your transaction piece. One of the unique things about blockchain technology when you're transacting in Bitcoin or Ether or any of these cryptocurrencies is the ability to see way past. So I received Bitcoin from an Iranian arms dealer, somebody that's on the OFAC list. I send my Bitcoin to Jameson. Jameson, you go try to deposit it at a bank. The bank can see all the way through that transaction and know exactly where that came from, versus Jameson, usually on Fridays when you come in with that big duffel bag full of cash, they know who you are, but they don't necessarily know where that duffel bag full of cash came from. And so really understanding the KYC, KYT elements here is going to be important. There's a lot of providers in this space that can help with that. So it's not something that, while most AML teams within a bank don't do it today, it's a tool that you can bolt on to do this. The other thing is, and if I think back to the letter, the first letter the OCC wrote, it talked about how custodying Bitcoin was really a digital safe deposit box. I think that was the analogy that they used. And so when we think about where the regulators are going to spend their time, the AML, KYC, KYT piece, but then also the core custody component, just like they would expect, some really good controls around your safe deposit boxes, they're going to expect some really good controls around your digital safe deposit boxes and how that you are custodying Bitcoin and other cryptocurrencies. We will see. We have banking clients that are building their own. We certainly have some that are using outside providers. You've probably seen BNY and State Street and a whole bunch of other banks announce the tech providers that they're using. And then PayPal bought a tech provider in the space of custody as well. So I assume that they will be heavily involved here. I want to take a pause here in our discussion to do a quick question, because it relates exactly to what we've been talking about. So the next polling question, I'm not going to bring it up on the screen, save all of you guys, but I will read it and I believe it's on your screen anyway on the right side. What are your biggest challenges to moving forward with banking digital assets? That KYC AML component I talked with. I use technology here, but it's, how are you going to deal with digital assets, which is a technology-driven thing? Market demand. Do my customers actually want this stuff? Or regulatory. What are my regulators going to say about me doing this? So I know it's a pick one, pick your biggest challenge. I'm sure everybody would say all these are going to be a challenge. I don't know what, you've been working with a lot of banks, Jameson. What do you think the consensus is without looking at the survey results, which I'm staring at now anyway?
Yeah, I don't see the survey results. I'm going to go with what does my regulator say? Because that was a big issue. No, I'm off.
No, that's good. I think it's going to be really close between regulator and regulatory and technology, which is really interesting from my perspective, because as I look back over the last 3 to 4 years, a lot of our first phone calls are from the chief risk officer worried about the KYC AML component. So I'm surprised it's coming in almost last, but last is market demand. Which is interesting too, that most do not believe that, or they believe that the market can handle it. So let's close this out. Regulatory continues to go higher and higher. 42% regulatory, 31% technology. So that's really
early on in the process. It was a question, when we were talking with a lot of the banks and the OCC, there was a huge question of what do the regulators think in this space, and they had a lot of getting up to speed to do. They did that. Credit to the OCC in terms of their efforts to get supervision and licensing and legal all on the same page here, because they're fully bought in now. You've had some others test the waters in terms of building that cred package of what your outside provider is going to do, because you can't just outsource everything to the provider. You got to know. You hope that they have some other OCC level clients on their roster, and you're not the first one they're demoing this, because digital, information security is, top of mind, right? We saw the SolarWinds hack. And if you think about what does that happen in the world of digital assets, that means money gone forever. So they are super strict in terms of wanting to know exactly what your procedures are. What are your custody solutions? If you're outsourcing that to a vendor, what does that look like? What are their protocols and procedures? Again, I suspect that there were some governmental breaches with regards to the SolarWinds hack, because the speed at which we got requests for information with regard to how our clients were responding to that and what they were patching and how they were doing it was very interesting, the timing wise on that.
So I want to be cognizant of time, Jameson. Quick kind of theory on what the future brings. What are we going to see over the next year? Are we going to see a bunch of banks entering this? What's your theory here?
Yeah, I think we're going to see a little bit of a pause through this year until we feel, get at least new banks coming in, like fintechs coming in through the door that was opened under Brooks. I think we'll see a few of these get up and running. There'll be the test cases. Regardless, right, we have the banking systems, this self-ratcheting concept of what is banking. We see the states moving forward with frameworks in permitting these activities. Wyoming, South Dakota are pushing the bounds, as they historically always have in banking. So I think they're going to move that forward. The big question is, what's this examination process going to look like in the end? Right? What is the examiner when they kind of come in and lift the sheet and try to check behind there? What's it going to look like? What does that process look like? And then who are the advisors you can rely on that have been through that process? Who is the OCC seeing? Who's the OCC comfortable with? Who carries credibility in this space? Because it's a little bit different. It's not your traditional core banking providers. It's not your traditional service providers in the space, although they're getting up to speed. It's equal parts tech and banking, and that was the really interesting thing in terms of the makeup of the board of directors of some of the applicants, is that the OCC was really looking for not only your technological qualifications but also your banking qualifications, and expecting a mix across the board.
Yeah, it's a great point as I think about, regulatory was the number one concern or answer. And when I think about approaching somebody like the OCC or the state regulators and just adding in here, you mentioned Wyoming, South Dakota, Texas has a bill. I'm told I'm not a Texas politics kind of guy, but I'm told it's not likely to pass. I live in Chicago, so I'm an Illinois politics kind of guy. I'm told the bill that will get taken up this month in Illinois looks like it will pass. So Illinois will mirror the laws of Wyoming, which will be really interesting here. But that is a key piece, I think, that the regulators are looking for you actually understanding what you're doing, right? It's not enough that, and I'm going to bring up my screen here in a second. It's not enough that you went and implemented a tool. It's that you actually understand what you're doing. And so just to kind of
I think they're serving as a go-between.
Yeah,
I think they're serving as a go-between. Like they're seeing how BNY Mellon's doing this. They're seeing how JP Morgan's doing this, and they're evaluating the approaches. And I think internally the OCC is coming up with what their view of how it should be. And I think it'll be a slow iterative process. I think we'll have that wait and look in terms of new applicants, but I fully expect banks of all sizes, state and local banks to federally chartered, thrift, whatever. I think we'll see them bolt on in some way or the other. And I think it's just the question of how do they tap into this market and what are the options for doing so.
Absolutely. And I wanted to talk a little bit about this picture because I think it brings it all together. And we went to our partners, Fireblocks and Chainalysis, to put this picture together. A lot of banks are using this type of model, and I think it's where you get your head around how this works. So you have your core banking platform, your FIS, your Fiserv, your Jack Henry. I will tell you, when you start to move into this ecosystem, it really makes you think about whether those core banking platforms are the platforms you're going to be with 5 to 10 years down the line. But they link right in, right? So it's not, this kind of is a module that will attach to it. And you have your custody solutions, which, I won't go into the philosophy of hot, warm, and cold storage of crypto, but you have how the custody works. You have your network that can communicate with all of the liquidity providers, the exchanges, the brokers, all the people who are going to help you give your customers access to Bitcoin. And then you have certainly a very big part of it, the Chainalysis component here, which is the KYT AML. And you've seen them doing a lot of analysis on a lot of the different interesting uses of cryptocurrency where they've written blog posts on it. And this is kind of how the pieces and the parts fit together, where likely you would have a capability within your application, website, however you choose to integrate it. And I know we think today about the retail user, and that's what gets a lot of publicity, especially the Robinhood traders. I think the opportunity for banks could be a little bit different too. And so I don't want you to solely think about that retail customer, but also to think about your commercial customer, where you have a controller, a CFO, somebody on the finance team who's looking at a large cash balance sitting at your bank and wants to move 100,000 of it into Bitcoin, for example, as like we've seen at Tesla and MicroStrategy and Square and some of the other companies to date. Some of our private company clients have done this as well. How difficult it is. I talked about all that friction. Here's an opportunity for somebody, a commercial client of yours, for the controller to go to transfer to Bitcoin, and it seamlessly moves $100,000 into Bitcoin through a model like this. And when that controller is ready to move that back to cash, reverses it and moves it back to cash. I think that's the ingenuity that I'm expecting that a lot of banks look at. Now, if your bank is, doesn't serve commercial clients, that's why every bank is going to be a little bit different. But I think that's why something like this could really be impactful on the commercial side, and certainly, on the retail side as well. I'm going to bring Jameson. It felt like you wanted to make a comment.
Yeah, I like the iteration of that structure because it allows the banks to stay true to their core competencies while bolting on providers that do this in the space. So they have the quals to do what they're going to do. They've been vetted by regulators, at the state and federal level, and it lets the bank focus again on serving its customers, principally in that custody capacity, which is the activity that's been explicitly allowed. Yet it also keeps control within the bank, which is different than maybe an alternative structure where you partner with an exchange and kind of outsource the transactions. There's obviously positives, negatives to each, but I really like that kind of that Fireblocks, the chain analysis kind of bolt on ability, because again, it keeps the core capabilities within the bank.
Yeah, that's a really key component when you think about you could be sending your customers to a third party to go buy Bitcoin, and you don't own that customer, you don't own that transaction anymore. I want to invite Emily back in. Just looking at the time, a little bit less than 15 minutes left. If you haven't asked a question and you'd like to, Emily, I'm sure I'm taking you're the first line out of yours. There's the Q&A piece on the right-hand side. Please ask your questions over in there. Where I think Jameson and I are excited to answer them.
Yeah,
Emily, do we have some questions?
Oh yeah, we've got some questions. But yeah, just to touch on Jay's point, if you have questions, we've still got time, and we're going to try to address as many as we can. But we have had some roll in during the presentation, so I'm just going to get started with the first one. Kind of touches from that final poll we had, or next to last poll, in terms of market demand, kind of came up. And this specific question gets at that, as well as monetization. He says we haven't had any customers ask about Bitcoin capability. So how does a bank make money off Bitcoin, and why would they invest in that technology or anything to enable that?
Yeah, it's a great question, and I guess I'll start off, Jameson. You can pick up at the end. I think back to my comment about you're not competing for price. People look at this type of offering, a frictionless offering. They aren't price shopping. They're not active traders. They're looking to put $100 a month into Bitcoin as a reoccurring purchase over the next 12 months or something like that. And so what we find is, and Bitcoin is at $386 on my screen at the moment. It's not unusual for a bank to offer, $56,800 as the price to the customer when they go buy $100 worth of Bitcoin, and be able to keep that profit as a transaction fee. If we think about, a different model of buying Bitcoin with the Grayscale Trust, the ticker symbol is GBTC, only for you to look up, not giving investment advice. The management fees on that are 2%, which is pretty high for a simple, it's not an ETF, but it kind of looks like an ETF. That you start to understand that offering this frictionless experience is going to drive market demand, right, Jameson? Is there anything I missed there?
For the platforms that aren't tailored to like the day trader, 1% to 2% of the transaction volume is a reasonable and accepted fee. Even on the exchange focused kind of the traders, it's not unheard of to see $25 withdrawal fees imposed. If you want to go that route of allowing people to pool, their Bitcoin out. So it's a very fee-rich area. The other aspect of the question was, well, how do I know, they're not asking for it now? And I'd say that's probably not typical of the millennial Gen Z to ask. They know what your services are. They look at the website. They know that you don't offer it, and they're just going to leave. I think you had your most loyal customers probably ask and demand for mobile check deposit. If maybe you had 0.05% ask, right? I think that's going to be magnitudes lower on the Bitcoin side in the digital asset ask. So I would say look at the adoption Look at the new user growth reported by PayPal when they launched it, by Square and Cash App. They saw huge growth. They came from somewhere. It's also not uncommon for younger generations to have multiple bank accounts. And you may not see them close your account, but you're going to see that balance dwindle and the activity completely fall off.
That's a great perspective. I'll go on to the next one because, like I said, we've got a lot of them to go through for sure. This gets to the technology capabilities on the part of the bank. This specifically is asking, about limitations of the core banking systems relative to this environment. And I would tack on my own end, are there any kind of technology table stakes, to entering this?
It's an interesting kind of chicken and an egg problem here, where if you look to Europe, there's a lot of I don't like this term, but neobanking platforms that we see, and we don't see that in the United States. My personal philosophy on why that is because when you go with the big three, Jack Henry, FIS, and Fiserv, the regulators give you no troubles, right? It's free and clear. I think we're going to see that change. We may not see your bank may choose not to use digital assets, but you may still find that you're struggling to keep up, and that you look to some of these neobanking platforms to move to. We have seen the SAP Open Banking platform. We've seen Nimbus and Mambu and some of these other technology providers slowly making a dent here in the United States. You don't have to use them to enter this space, but I think when we start talking about new products like this, it really does open the discussion for what else is out there. So I don't foresee Fiserv and FIS and Jack Henry going away anytime soon, but I do think that that market share of some of these neobanking platforms will continue to grow, and we will see that not because we know what core banking platform every bank is using. We're going to see that because we're going to see these new and innovative services that are really difficult to offer under the core banking platforms we're all used to.
Do you see in terms of third-party providers, how do you see that space developing?
I mean, that's, you look at our picture of Fireblocks, New York DIG is being very active in this area as well. It is a time where, if you think about it's that seminal moment. I think everybody needs to think back to around 2000, 2001, as banks were going online. They started off with a pretty boring just website with a call us button, and eventually moved to kind of what we call online banking today. And there were early adopters, there were fast followers, and there were those who lagged behind. And think about where your bank was, assuming it was around back in the early days of the internet, in that whole evolution. Because I'm a big believer that this is that same type of transformative effect that's happening now, and we're going to see some similarities. So if you were a fast follower, back with online banking, I foresee it's probably a good idea to be a fast follower here as well. I would also look, and Jameson, you touched on it a little bit, is with the remote check deposit. That's another one of those technologies that we've seen a pretty wide swath of banks in there when they chose to adopt that. And that also tells me that that's a good indicator of when they would adopt something like this. So this is, I think, we use the you don't want history to repeat itself, but I think this is an area where we probably will see some analogies to the internet, to remote check deposit, that will show up here in digital assets and in the evolution of the core banking platform.
I think dust off those autopsy reports and look back, how quickly do you wish you had integrated those prior technologies? And I think that's
probably a better way to look at it.
Yeah.
Well, we've had another question roll in that I think gets to probably where the stage where a lot of our audience is just being at the beginning of that journey. So this specific question is, what recommendations would you have for a bank at the very beginning that's thinking about getting into cryptocurrency?
I think you need to think about what makes sense for your bank. And if you heard me talk about offering your commercial clients an easy way to move a working capital account into Bitcoin, if that was exciting, that's a good first way to dip your toe into it. If you're a bank that's serving a younger audience, this is a good way to look at, competing against the Venmos and Cash App and that whole end of the world. So I want to emphasize that this is not a one-size-fits-all model here. It really is thinking about the business model of the bank. And Jameson, I'm thinking as I'm saying that, we worked on a lot of these bank charters for a lot of different banks, and every one of them was different, right? I mean, every one of them is choosing to work in this model in a different way.
Yeah, I think it's hyper unique, and that also boils into what the regulators want to hear, right? If you want to get into this space, you need to go talk to your regulator and get the new activities approved, and they're going to want to see the security protocols that you put in place and the new flows and how you're going to keep the consumer protected in this environment. So it really builds on that narrative of what your customer base is. What's your strategy going forward? How do you want to grow? Are you a bank with an exit plan? Do you want to build high tech and try to get acquired? We've seen a whole mix of that. What drives everyone is an excitement about the space, because I think they're driven by the excitement from the consumers in this space. It goes through boom and bust cycles. But I'd say, since the last kind of boom cycle of 2017, we've seen a lot of groundwork laid on the regulatory front, really keep it moving. And it's been a slow and steady drive up, overall. And it's something that, if you're interested in learning more, we're happy to talk to people. There's a lot of other providers out there that can talk it now too. So, the questions you want to ask as you're educating yourself is, what are the experiences of those people talking to me? Have they done this before? And then, getting out there and learning is honestly, once people want to learn more, they keep wanting to learn more. By and large, I think that's the biggest hurdle that we've seen in the education front is that desire to learn more. And it's just, I think it grows from there. And then you understand the capabilities and technology and where this can go and the value it can drive for your customer base going forward.
I know we're short on time. I just want to add one more thing, just adding on to what Jameson said. Beth Knickerbocker, head of innovation at the OCC, every call that we've had with her and our clients has been phenomenal. And I think that they get this. And I think it's great to have those conversations with them. If you're afraid to have a conversation, don't be. Jameson, would you echo that sentiment as well?
Yeah, I mean, Jay Gallagher, Stephen Lieberger, Val Wynn, Jonathan Gold, like they all have just adopted it and get it. And it's really cool to see them. It's not even them pushing down, the staff get it too. So they're super receptive to conversations in the space because they're trying to figure out how this is going to be used right? They've heard a lot from fintechs and why the pains they have interacting with the banking space, the traditional banking space. I don't think they've heard as much from traditional banking in terms of why they want to get into it. And I think those discussions help both sides.
Well, I'm sure we could probably talk for another hour. I mean, this is such a rich and fascinating topic. And Jay and Jameson, thank you for walking us through it this afternoon. I do want to throw out to our audience as a reminder, you'll receive the recorded version of this webinar within 24 hours. We'll also make sure it's available on bankdirector.com and rsmus.com. But again, thank you to Jay, thanks Jamison, and thank you to RSM USL LP for co-hosting today's webinar. And thanks everyone out there for joining us today. It's definitely been a lively discussion. Have a great rest of the day.